Hey everyone, this is Dawood from AutoMarketplace. We have Jeremy Moskovitz from Voyager Global Mobility. Thanks a lot for joining us, Jeremy.
Yeah, of course. Thanks for having me.
And so Jeremy's going to describe, obviously, he's going to speak for himself and his background, but Voyager Global Mobility, you'll know them from the NYC TLC rental companies, Buggy and Fast Track, which a lot of drivers and people know. And so, Jeremy, do you want to kind of give us some background about yourself, about VGM? I think that's the abbreviation, so you don't have to say
Yeah,
Voyager Global Mobility all the time on VGM, and, just the background to all of that.
sure. So, as you said, Voyager, most New York TLC drivers probably don't know Voyager, but they do know Buggy in Brooklyn and Fast Track in Queens. We are the largest weekly rental only. We only do weekly rentals, right? No leasing fleet in the city. We have used our New York knowledge and experience to expand nationally and throughout North America. But our story really got started. Buggy and Fast Track were two separate companies, started around the same time, right at the frontier of the TLC rental industry, forming before a lot of the regulation and before the cap on licenses. And so, Buggy started in Crown Heights, Brooklyn. It started by one of our co-founders literally trying to get into the Uber business as it was coming to town and realizing how hard it was to rent a car, to deal with the TLC, to get through it. And so he thought, there's a market here. And he started, Fast Track started in Queens, and they both grew to a few thousand vehicles. And then they merged about 3 years ago. So
And are these like, is it fair to say like there's some rental companies in the industry like, you could say your other, like the other two names that everybody knows is American Lease and Tower, but they were kind of pre-Uber. They kind of like they're not native per se to the Uber and Lyft rideshare paradigm. Is it fair to say that Buggy and Fast Track kind of grew as with Uber and Lyft, like the rise of Uber and Lyft, that's kind of how they started out? Is that a fair characterization?
yeah, absolutely. And both Buggy and Fast Track, even though they weren't related at all, 8, 10 years ago, they had done some leasing. But as soon as the cap came in, both companies really stopped leasing because it was too complicated to work to explain to the drivers and really make sure that they understood that they're not getting a plate right at the end of that lease to own because of the cap. And we had a few hundred, and they cycled out as they could apply for their plates up until like a year and a half ago when the TLC finally cut that off.
And that's definitely a topic that a lot of the driver and fleet community, and we'll get into that, although we're going to cover a lot today, but they're definitely going to want to hear more about that. Just on a very basic level, in terms of this lease and rental is kind of thrown around a lot, and so maybe could you provide us, like, so you've already described like Buggy, Fast Track, they're two separate companies, they merged, they're basically these TLC rental companies. What is the difference between leasing and rental in your eyes? Because I think those terms are kind of loosely thrown around.
Yep. I would say there's rental, leasing, and this predatory leasing and predatory lending that we've heard from a lot of the regulators and TLC, et cetera, in the past. And I want to be super clear, like we've spent a lot of time over the last year and a half working more closely with TLC, working more closely with City Council so that they know exactly what we do, which I'll explain in a second. But also us and the other major players. I would put them in the same boat as us, American Lease and Tower. Of course, we're competitors. We all compete, and we all have different things that we would say make us better than the other. But as these large fleets, right? Like we offer only rental. I think they focus a lot more on rental and leases. And we've pushed back against this concept that anything in this market, right, a fleet is predatory. And luckily, I think we've spoken extensively with Commissioner Doe, and he doesn't put us in that category. I think a year and a half ago, a lot more people were making comments that any rental.
And just to help you out, just to give you a background to the viewers who might not, I think a lot of drivers will know what you're talking about. I think kind of there was this, you could say, regulatory / political talking point that more TLC plates should be released because certain rental companies, of which the VGM brands are amongst the largest, Buggy and Fast Track, were somehow ripping off drivers, or effectively payday lender type entities. And I think as people have gotten more educated, like you said, as maybe the commissioner wasn't targeting you, but maybe unintentionally you got swept into that.
Right.
Because obviously if you're one of the largest players in the industry, and then he's saying that industry is predatory,
Yeah.
then they're like, well, okay, then they're predatory. So anyways, I'm sorry to interrupt, but
No,
I just want
totally. So
to
what I
give
would say
background.
is, let's one more sentence on this predatory topic is, for me, what I would consider predatory in any industry, but specifically this, it's about price gouging and it's about the terms. And this is where, I think we should go into detail on this podcast on why does a car cost this much, right? Why is it this expensive? And what are we doing about it? What are others and what are the regulators doing about it? But it's really important not to just look at a price and say, oh, well, renting a car from Hertz for the weekend is cheaper than that. Why is it like this if you don't understand? But yeah, there absolutely are ridiculously priced rentals and leases out there from different parts of the industry all over the place. We don't.
Including, by the way, individuals who rent out their. I think that's also another, and
Correct.
we'll get into the business model, which I think was going to be really interesting to someone. And coming from you, I think it's going to have a lot of meaning for people because you run one of the larger fleets. Is that I for the audiences there, like I think a lot of people don't understand that there's also a rental market where individual drivers are directly renting out their cars. It's not only corporations renting out
Right.
vehicles.
Right. And some of that is done the right way, and some of that is done on a black market, right? And there absolutely are predatory measures in the pricing there with some companies and some individuals. The other is on the terms, right? And just because something is legal or in a contract doesn't necessarily make it right. And so a lot of contracts, leasing contracts, or like forced long-term rentals, which I would say are the same as a lease, have ridiculous cancellation terms. Or there are plenty of people in New York, out of the 100,000 or 120,000 original, like at the peak TLC drivers, who were in these leases expecting a plate. And really all they end up with at the end of 5 years is a crappy, beat up, really like a 7-year-old Camry that has 250,000 miles on it and no TLC plate. So they actually have to go back to renting and finding it. So that is where, whether it's on purpose or it's just that there are a significant number of the hardworking, successful TLC drivers in this industry are first generation New Yorkers and first generation Americans. And English is not the first language, right? And they don't have good credit. Otherwise, they would buy their own car, even if they could, but they can't. And so there's many things working against them. And so just because someone signs a contract, even at the company, and we can talk about a few of our policies where we struggle just explaining what it is, right? Because some of the 1-star reviews on Google are because somebody got in a not at fault accident and they were explained the deductible and they've signed it 6 times and they will get the money back if we can subrogate and get the money from the other person. But until that point, we have to collect the deductible, right? That's our policy. And so no matter how many times we explain it, there are people who just don't get it.
And
And
it's interesting you say this, and we'll get into, I think you're explaining everything very well, and we'll get into the guts of the rental business model. And I think we've had other kind of, we've had a guest, a former American and Lease employee who's spoken about this. We've had a leasing specific podcast. But on that point, I think sometimes what happens with rental companies is, like, let's say Uber and Lyft are taking a large commission or the insurance rates are going up. Everything is put like, oh, well, the rental company is gouging me. And I think that's like a good background to transition into. Could you explain, can you explain, like, very simply, like, okay, if someone sees that on the street, or like someone says that in a public hearing, which is often said, like, oh my God, I'm paying $500 a week for a TLC rental, therefore I'm paying, $20,000, $25,000 plus a year for a Toyota Camry. This is outrageous. These are payday lenders. This is predatory.
Yep.
Can you kind of at a high level explain, okay, of the 450 or however you want to approach it, but maybe a
Sure.
simple way is like, of that 450, this percentage is insurance or this, like, how would you explain that to someone? Like, what are the underlying margins on
Yep.
the weekly rental?
So before we hop into that, I just, because you got to keep me on track. I'll go all different angles. But on this, the rental piece, the one place where I wanted to close is what makes VGM different, and the reason that we are specifically defining ourselves within the rental industry, not leasing. I mean, our legal name is Fast Track Leasing, right? For Fast Track side, but we are a rental company and we are a driver-focused rental company. Again, I told you the story of our founder. That is why we started. We are only successful if our drivers are making money. Otherwise, they return the car. We have no strings attached rentals. We do require a 2-week minimum as you start. But after that, it's weekly. You just have to return with 7 days notice. So, will you get fined for an unscheduled return, scheduling 2 days? Yes. But literally you can rent for a year and a half and decide to go on a 3-month vacation or even a 2-week vacation and return your car with 7 days notice. You don't have to pay for parking. You're not paying for insurance. You're not paying interest on a car that you're leasing. And so that is the benefit of the rental market. And that is the primary reason why we exist and will continue to exist. I do want to remind that we've expanded from New York to 12 other cities in the US. And actually, Uber is the one who brought us down to Mexico City back in 2020 because there wasn't a consistent supply of vehicles. They had drivers.
And are these operating under different names in all of these geographies?
In the US, we have Fast Track and Buggy in New York. We have Buggy throughout the East Coast and Southwest. And we have a acquisition that we made, a company called U-Cars, which is in Phoenix and Dallas. But eventually those two brands will probably be merged into Buggy.
Got it. Would get rebranded. It's like I think Enterprise owns in the background National, and a lot of people don't know that.
Yeah, except those usually
yeah.
have tiers, right? Like there's the crappy car and then the good car. We
Fair enough.
are consistently good everywhere. But
Okay.
and in Mexico, it is Mi Nave.
Got it.
And we are now the largest fleet in Mexico. We work with Uber and Didi, the Chinese app company.
That's really interesting. So you guys run the largest, I don't know if they refer to it as rideshare there, but rideshare focused rental fleet in the country of Mexico.
Correct. Because again, Uber came to us first and said, we need what you do here in Mexico, and helped us grow, just like introduced us to the right people. We work very closely with them. So we grew from 1 car in February 2020, right before COVID, up to 2,000 cars. And we have lease to own options there. We're just culturally, it's harder and more important to get a car and own a car and have your name on it. So we have different options there. And then we also operate in Costa Rica, which is really interesting. We're the largest fleet in Costa Rica. And that falls into our green initiatives. And we actually ship cars from New York City after they've been in our TLC work for 4 years. Because there's such high tariffs in Costa Rica, almost all the cars are used. And so even our very mature cars from New York are seen as pristine and helpful in Costa Rica.
So basically like a 2017 Camry with like 300,000 miles.
So Camrys are too wide for them there. They're more efficient. We mostly ship our Hyundai Elantras and we convert them to LP, liquid propane. And that falls into the green initiatives and helps Uber and us, and it's really popular there. So it's a cool supply chain, and we're able to offer a premium product.
So if you add up all the cars across like all these cars, like how many cars are you running? Like I guess in the Western Hemisphere.
So I'd say we call it North America for now, but it's really Costa Rica, Mexico, and the US. And it's about 11,000 cars by the end of this year, or sorry, by the end of last year. And we're growing by about 2,000 to 3,000 cars a year.
Wow. Okay. So I think a lot of people on this podcast will be surprised. I knew a little bit of background in this, but I actually didn't know the extent of it, that you're kind of New York City born. You're born of the TLC, but this is gone well beyond that now at this point.
Think of us like JetBlue. Right? New York's home airline with the extra leg room and really nice in the TV screens.
Yeah.
A real player in the overall industry.
Okay, that's really interesting. So, and I know there's like,
I don't think I have permission to call us JetBlue, like if that's trademark. So
yeah, no, no, I don't. Hopefully, no one's going to be that aggressive with their litigation for this
yeah.
as we talk. But okay, so those are obviously different markets, different business models. Interesting nonetheless.
Last thing on rental. So just to
Yeah.
summarize though, the reason rental is important is specifically the no strings attached, right? This is the gig economy. It was born in the gig economy, and the whole thing is you get to work on your terms. And so specifically in New York, where we are the most regulated rideshare market in the country, possibly the world. Again, I don't know the regulation in China and whatnot, but like in most of the Western world, New York City is the most regulated market. Drivers who drive for TLC have gone through extra hurdles, and they are professional drivers. And so there's this weird balance of professional driver and gig economy. I will say most people, it is grueling, sorry. And so they're not working 5-6 days a week for 12 months straight. They take 2 months off, right? That's why they do this. And so rental is really appealing to those drivers where they don't have to make the investment in the vehicle. The other thing is that accidents are inevitable. Even the safest driver is going to get rear-ended by someone who sucks at driving in New York City. And so if you own your car, great. You maybe have the money to pay to fix it while you wait for the other person's insurance carrier, if they're insured correctly, to pay you back. If they're not insured by Attic, which I'm sure we'll cover in a little bit. But your car is going to be down for a month, 2 months, 3 months. You're not making money. And so by renting, right, especially if you're not at fault, and then even if you're at fault, but you've rented with us for a while, we can re-underwrite you. You get another car in 2 hours, right? Or something happens mechanically, you get another car in an hour, and you're back on the road making money. And then the third piece is there will always be people who just cannot get a loan to finance a car, to buy their own car, even if they could buy the plates. And then there are people who, after a year or two of doing this, realize that putting 40,000 New York City miles or 80,000 Texas miles on your own car just isn't worth it. And it depreciates. Depreciation is a very difficult concept for people to grasp. For us, it's part of our financials and it's part of our model. But for individual operators, it's really hard for them to take that into account. And so eventually people come around to saying, I own 2 cars for myself, me and my wife, and I rent from Buggy in Atlanta to earn money on rideshare because that makes me more profitable.
And I'm really, that was great, because what you're basically saying, and I think it applies, and we'll get into it as well in terms of more specific with more specifics with the TLC plate cap. You're saying that, and by the way, you existed before the TLC plate cap, right? So your basic point is that even if there wasn't a TLC plate cap, there is a need for a rental market, and there's reasons for that. And you've highlighted some of the main reasons, including, let's say someone's credit score is bad. Let's say someone understands that, oh my God, if I get into an accident, I don't want to deal with the headache of all of that stuff. And they even have a personal car and they just rent from you. So
we're in the month of Ramadan right now. Every year, Ramadan is a slump for us in terms of higher returns and lower pickups. We have a core subset of our drivers who are celebrating Ramadan, who use that time to travel back to wherever their family is from, or the majority of their family is living now. And so they leave for a month and a half, right? That's when they take off, not in the summer, which is high season, not in November, which is Thanksgiving. And so that they have that ability, right? You're wasting thousands of dollars if you own your own car, plus finding parking, plus you come back and the battery's dead when it's sitting at the JFK airport, long-term parking. And so, that is the value.
Yeah.
And as I said, we did exist before the cap. We grew, continued to grow. And in all of these other cities outside of New York, there is no cap, right? And we're thriving and growing.
Exactly. And then there's definitely value in that. And before I know some of our audience, because they'll be like, Will, I'm a long-term driver and I understand the pitch he's making. Just for those guys, we'll kind of, as we get into the podcast, we'll kind of address a very delicate balance that everybody has to think through related to why a TLC plate cap exists, what it's solving for, how to think about that. So I guess the best place to start is kind of addressing this elephant in the room that you hear at so many public hearings, that I am paying $25,000 for a 20, a couple model year old Camry. This is ridiculous. I'm being ripped off. Just you can get an. I'll leave it to you to explain it however you want it to, because I'm more technically minded. But how
Yeah.
would you explain, like, why does a TLC plated Camry cost 450, 500, 550, and what's included in that, and kind of leave it to you to kind of explain that.
Sure. Yeah, it's absolute. To be honest, over the last year and a half, because there's been so much turmoil, and I just feel like we're all getting punched in the gut left and right on every side of this industry. I've actually heard a little bit less complaining of the price gouging, if you will, of in general within the industry. It absolutely still exists. I will say, Buggy has always been higher price than its competitors, than Fast Track and American Lease and Tower historically, right? I'm talking 2022, 2023, the golden years, I would say, sort of the swing back from COVID was coming. And there's a reason for that. And by the way, outside of New York, our major competitor, the only national competitors are Hertz and Avis, who have plenty of metal, right? But don't actually understand the industry. They're not, this is a small part of their work. And based on the Hertz earnings reports and stuff, it seems like they're moving away from it after they tried to jump into it. But we're higher priced than Hertz and Avis. Rideshare drivers will pay for service and consistency and the right tools that make them successful. And we have seen that. Not everybody, right? And some people have to learn the hard way, and they have to take the cheaper car from the worst company and then come back to us. But that's what I would say, is there absolutely is a service premium. And I don't just mean customer service, right? Because I can't promise that with thousands of cars in New York, with dozens of employees, and with some great customers, and let's be honest, some customers who are trying to screw us over and aren't great customers, are trying to lie and steal and cheat. Like, I can't promise that every single transaction is going to be perfect, but I can promise that overall we deliver an important service that actually does make rideshare drivers more successful. And so that is built into that price. And I've heard, I think that message is getting through as these other insurance issues bubble up, as the wait lists and the lockouts and all of that other stuff has happened. I think there's a tiny bit more appreciation for us and some of the other companies. Now, going back to your question, why am I paying $550 for a 3-year-old Camry? What I would say is, you shouldn't be paying, and I've heard $650, $750. Every Uber I get into, I ask and talk to the driver, usually like the last 10 minutes of the ride, just in case they have a really bad experience with Buggy or Fast Track, and then I'm not stuck for 35 minutes with them.
Fair enough. Yeah.
But I'll ask, and a lot of them are paying $600 for these older cars, $650, or they're paying $350, $400, but they have to pay their own insurance. So it all adds up. There's a level of scale that we're able to provide, as well as the other rental fleets, right? Tower, American Lease, sorry, the larger fleets is what I meant to say. The smaller fleets don't have that scale. And so again, there are benefits to them, and maybe they can put some riskier drivers in that we won't underwrite. There's pros and cons to everything, but I would say a lot of the smaller fleets have to charge more because they don't have that scale. One of our benefits is that we've grown nationally. Again, pro and con, two sides to every story. Some of the overhead that we have as a company, right? And some of the finance team and all of the stuff in the league is bigger because we're now a national global company, right? And it's not just about New York. So on one hand, our drivers are carrying some burden of that in the cost of their rental. But on the other hand, right, they're getting the cars that we're able to purchase and negotiate with Toyota. Everyone wants Toyota, right? But also with GM. We're a very GM heavy fleet. They're benefiting from that. They're benefiting from, we'll talk about insurance, we'll talk about our safety initiatives. What we're able to invest back on the soft side, right, on tech and on support, is so much bigger and better than what it would be if we were just a New York rental car company. And so again, are they paying a little bit more for maybe a chief commercial officer or whatever that we wouldn't need if we were just Buggy and Fast Track? Yes. But are they paying a lot less on everything else? Yes. So I think overall it's a major pro.
And another way to say, like, and what you're saying, I'm understanding fully. And just to kind of almost paraphrase what you're saying, is you're saying that, let's say, of the $500 per week rental, there's obviously a lot of drivers and people forget to, like, it doesn't, there's employees in a business. So there's overheads in a business. And so the basic point you're making is that, let's say you charge 500, but someone else is charged 600. The reason you can charge 500 is, overhead is, let's say, a fixed cost at a certain point in time. And if you have many, many cars, like, you can distribute that amongst, a larger revenue base. And so that allows you to, offer it for cheaper. So if for like a driver, I'm just thinking about how they would think about this, like overhead, if you allocate that, although you might not do that in your financial, it might be, 30 or $50 per week just to maintain the overhead of Buggy and Fast Track. Now I made up that number, but kind of that concept. And then the insurance, if it's, and we're going to talk about insurance because that's a very hot topic. And
insurance is our main expense, and it's not just the insurance premium, but it's also everything behind it. So we'll talk, I know in a few minutes, we'll go into detail on our sort of insurance structure and thoughts on what's going on. But even, again, we have an amazing chief technology officer. We've invested in software that works for this industry. There really isn't anything off the shelf that exists. The trucking industry, right, where you have drivers associated with trucks and goods in that truck and it's going across the country, has software. Rental car companies for leisure have software. There is nothing that connects the intense fleet management that's needed with triennial inspections at the DMV and different things in Atlanta versus New York, but even just New York, the craziness that we have to go through, TLC, renewals, inspections, fines, summonses, tracking all of that with what needs to be done to the car, with the customer, with the customer's underwriting, with insurance and accidents and subrogation and all of that together, plus delivering like a rental experience. You walk into our office, you have the iPad, you go through the contract, you sign the contract, it links automatically to the VIN, you get your documents and your insurance.
And then you also have physical locations, the rent on the physical location.
So all of that, right? Like, we wouldn't necessarily go that far if it was only a few thousand cars in New York. And also if we didn't have a vision of 100,000 cars.
And for our business, I think as you're speaking, you're framing it in a very different, for our business that, there's a lot of business guys and executives who subscribe to us and tune into us. You're basically saying that, like, this, and you've already kind of said it before, like, there are passenger car rentals, and that industry is like the Hertz enterprise Avis budget. Then and then this is kind of like, it's not exact, like, just let's say, to your point, let's say Hertz is really good about passenger car rentals. No one knows that those big three companies, they know how to run a passenger car rental company. You're almost saying, like, this is kind of like running a taxi garage and a rental company, and it's a unique skill set that might not be appreciated. It's not like you're running Hertz. You're giving these cars out to rideshare drivers, which 100%. Is a different subset.
And I will say, a rental car company, by the way, most people rent Hertz cars or Avis with their Amex Platinum, and that covers the insurance, and you don't need a CDW or whatever. We're not dealing with population, and I don't mean this demeaningly, but that has Amex Platinums. We're dealing with people, by the way, like, we, outside of New York, we're credit card only. We require credit cards on file. And most of our customers pay on credit card weekly, but we absolutely have people who come in and pay cash in multiple deposits, and they're waiting until they get paid from Uber. It's interesting. So when we started out, both companies had a single payday. Do you know what payday that was? It was, I think it's either Tuesdays or Wednesdays, when Uber would pay, because Uber would deposit money once a week. We are also, I think this is important to say, we're post-pay, meaning you walk into Buggy or Fast Track, you do have to put down a deposit. We're giving you a car that is valued at multiple thousands of dollars, to like $20,000 to $30,000. So we need something. You're paying a 1-week deposit, and that stays on file, but you're not actually paying your rent until the end of each week. And so we're giving you that chance to go out, work your butt off, make money on Uber, on Lyft, on Agape, on private bases, whatever you need to do legally. and then pay us at the end of the week. So that's always been our mentality, right? We have to build this for the industry. So that is the difference. And there really is nobody doing this globally. There are a few players, right? But there's absolutely no one doing it in the US. And we are 5 or 6 years ahead of any other sort of conglomerate. Even our competitors here may have some projects outside of New York, but nobody is at the extent we are.
It's really interesting because I never thought about it how you're framing it, but you're almost like a hybrid of a taxi garage. There's elements of being a taxi garage expertise with the elements of being a passenger car rental expertise, and kind of combining those two skill sets in a really unique way, where if someone from Enterprise or Hertz is listening to this podcast, they'll be like, oh yeah, we can do Uber rentals. They're like, oh, okay. Like, this is like the difference between commercial construction and residential construction. Okay, you're in the construction business, but it's two different things.
And look, we have offices everywhere. By the way, during COVID, we played around with some really creative things, remote pickups. Because we had GM OnStar, we would actually like lock the cars, and then you would go to the car and call our call center, and then we could unlock it remotely, and then you get in. We tried that stuff. But the truth is, as creative as that was, it's extremely important to have people come into the office and deal with our staff and walk through and talk through. So even if we wanted to bring back remote pickups, I would only do it with previous renters, right? Because that first experience and the training and the support is important so that they fully understand. You need to know this business. You need to have infrastructure on the ground. Of course, you can't have too much infrastructure. There's a balance. We have 24/7 support, not only at maintenance shops, but call centers, right? And we're able to do a whole bunch of stuff remotely and work from home and whatever, but we're always going to have those people in the office. And that's really important.
And so as we transition to insurance, because I think we're gonna spend a good chunk of time talking about different things in TLC insurance and also VGM specific initiatives that you actually just announced, just to kind of put a fine point on, okay, the car rental is $500 per week, and the net margin on that might be 10% or something like that at the end of the day. Although people think you might be making 80%, it's kind of like if you're running an amazing company, it's like in the teens, and it's mostly probably low single digit margins.
So I'll answer. I know where you're going, and you want a specific number, and you probably won't get it. But we didn't really talk about the number. We went off on a whole bunch of other areas. So 550, right? Common number thrown out for a Camry. I want to clarify. We are rolling off brand new Camry 2025 Camry hybrids. All Toyotas, I think, or at least all the Camrys, 2025 and forward are only hybrid. We're renting those for $579 a week. So that includes insurance, right? We offer a CDW product, but otherwise it's $1,000, up to $1,000 damage, depending on, how bad the damage is. But people also don't realize, so like a Hyundai Elantra, right? Cheaper car, still nice, but cheaper on the spectrum of like a nicer GM. The headlight on an Elantra is extremely expensive. And that's what these car companies do, right? The car itself might be cheaper, but certain parts are extremely expensive. And especially as you go into hybrid. And so a customer might think we're stealing from them because all they did was get like a cracked headlight, but we have to replace the entire headlight, right? Or on a Suburban, it can be $1,500 for a headlight. And so, yeah, you lose your deductible. If you're fully at fault, you lose the deductible. But by the way, we're losing $500 on that. Like we're charging you $1,000, but we're losing $500.
And to your earlier point, because I understand that you can only share so much. Fundamentally, also a driver of pricing is how much a driver is earning. And so that's like another, even if the true price should be, let's say 800 per week, let's say to justify all the risk, all the investment, there's also this element that, well, if a driver is only earning X amount, you can't charge above that. And so I think to kind of, as we transition to speaking about insurance, is that I think what drivers have to understand is, and we'll talk about it, is yes, everybody wants their own TLC plate, which is, I think, really what this is about versus it
Yeah.
being 550 versus 575. Because, I run a very, very small fleet company, as people know, but you were in this industry before the pandemic, and the rates were the same. No one was complaining as long as the earnings are there. I mean, in the taxi medallion heyday, they were charging, $1,000 or $900 per week for a 12-hour
Right.
shift, and no one was complaining. Why? I mean, no, to the extent because their money was there. So if someone has to pay $100 for a 12-hour shift, but they're making 600, people understand that.
Yeah. And look, we're in constant conversation with drivers. We'll have drivers share their earning reports with us. But you nailed it on the head. We can't charge more than drivers can pay. We're rental, right? No strings attached. So they're not even signed up for a long-term lease. Not that you can really force them to pay that either, right? You just repossess the car if they stop paying their lease payments. But, you know, so maintenance, right? We run these cars for 4 or 5 years, and we maintain them and we pay for the maintenance, right? Yes, drivers will get frustrated if there's a long line because they're giving up a few hours, right? And if there's some reason and there was a problem, then we give a credit, but people will complain, rightly so. Okay, you gave me a half day credit, but I make more than the $80 credit you're giving me in half a day. And I get it, but there's a balance there. So maintenance, right? Collision expense. I gave you that example of the headlight. It's not just the deductible. We have expenses to fix the car. There is this overhead that we talked about, but there's specific New York overhead. I mean, look, regulation, we are generally pro regulation. It helps with the argument of why you'd want businesses involved in this, because inherently we're going to be able to deal with that bureaucratic regulation better than an individual. We'll take that off your shoulders. So we generally like regulation. We have been frustrated with some of the regulation in the last few years. But we have a whole department, a whole TLC department, right, that just manages the renewals and the summonses and all the issues and waits on hold with the TLC for 4 hours and follows up on the 6 emails that we have to. And they're threatening to remove this plate and like deactivate it, and then it's lost for just a bureaucratic computer error or following up. The DMV is the state, system, and TLC is its city system, and they don't always talk. They're supposed to, but it seems like sometimes they're working on like 1995 MS-DOS systems. And so we will get passed back and forth. We have a team of 6 people that just support the TLC regulation process, because our most valuable asset is that license plate and we can't lose one. And we've gotten close, and there's horror stories of individual drivers losing their plates or fleets going under because of that.
And just so people understand that, if you lose a TLC plate, like, your fleet is reduced permanently.
Yep.
So,
Yep.
so okay, insurance. Yeah.
And then staff, and then insurance is a huge cost. So we're going to go into it, but that's the largest expense that we have, and it's millions and millions of dollars a year, divided by these cars, plus everything else of maintaining the building and whatever. Plus, we have a purchasing department, and we have to sell cars at the end. So there's a lot of staff involved that go into it.
It's a massive operation. There's just like it's a lot of moving parts to this operation.
Yes. The margins are, relatively low, or I don't know relative to what, right? But even if it's in the teens, as a growth company, we're not growing in New York, and we don't plan to. We just want to get better, right? And get newer cars. But, Buggy and Fast Track last year, with all of the chaos and stuff, it's been a question of, are we buying new cars for here? Are we waiting to see how it goes? Demand has been down. But let's say like 2023, Buggy and Fast Track had the newest fleet in the entire city. And so we're investing in what we call replacement CapEx. For people who aren't as into it, we're buying newer, nicer cars, right? We're not running 2016 Camrys. We're buying better trackers that allow us to control our assets better in a responsible way and make sure we don't lose cars, right? We're investing in cameras and tech and things that make it better for everybody else, that make sure that drivers who are in not at fault accidents get their check back quicker, because we've settled with the insurance companies and got the money we need so that we can pay them back. Those are the types of things we're doing. So similar to how you think of like Amazon, right? Amazon was never profitable, or Facebook for a long time. I don't want to say that we're unprofitable. I don't want that on the internet, but we're investing in growth, and we're reinvesting in our fleet and in our abilities. So like today, we're not focused on how much money we can make, right, and squeeze out of every car. We're more focused on how can we continue to build this platform so that when we're 50,000 cars, when we're 100,000 cars, we can continue to be the most successful. And
I think I think you've answered this question as well as anybody can answer it. And I think it's important you said these things, because I think and again, like you said, he's switched his positioning now. I think for when a specific industry is attacked, or maybe you could even argue defamed in the way specifically the rental industry has been, again, like you're saying, it's loosening up, right? But it's kind of been scapegoated in a way. And I think
Yep.
it's very important for the people listening to this to say that, like, if you're going to call a company predatory, like that's a very loaded word. And okay, one thing is to say, okay, Amex is charging 25% interest rate and it's predatory, and you can get into debate. If a company isn't even making 25% profit margins and then you're saying they're all predatory, it's kind of like this is just unfair on multiple levels, and you're using an industry as a scapegoat. And so what's an interesting transition to insurance, and speaking about that, and I know you've spoken about it, is that amongst all of this speak about the predatory leasing companies, what does everybody in the industry find out? The largest insurance company, TLC, I know you know this, taxi, FHV insurance, for hire vehicle insurance company in New York City, has been insolvent for decades.
Yes.
And so that's, how do you think, like, I'll leave it to you. So how do you think about the situation at American Transit? How does it impact your business? And maybe we'll start there.
Yeah. So look, first, insurance is really difficult to understand. And I am not the insurance person at our company. I'm in it because like it's a huge part of our New York operations and our strategy, but it's extremely complex to understand, right? And there is what we call subrogation part, whereas somebody hit us and it's not our fault, and you have to go after them to get the money to fix your car and pay for bills and whatnot. And then there is the liability side, where you are at fault, or you're deemed at fault, or partially at fault, and you have to cover those expenses. Those are sort of the two sides of it. There's premiums, there's insurance companies, there's the state regulators, there's the city. And my biggest frustration is that it doesn't feel like enough people who are making the decisions or talking about it or writing the articles understand it and understand the difficulty. And that is how I think you can get away with a company like American Transit being in default for 30 years, but specifically the last 2 years, where even it's been under the microscope, right? Whatever reasons, I don't know about the last 30 years, but I know about now, and it's a well-known secret. It's not a secret. But even the TLC, right? I've been vocal on some of the hearings, and the way that they're choosing to try to fix the industry, and I'll give it to them, they're trying. Finally, people are making an effort. It does feel a little bit too little, too late. They're trying, but it still doesn't seem like it all makes sense, right? And I've heard, some of the commissioners asking questions, and based on those questions, it feels like, again, not everybody's on the same page at the state level, at the city councilors who are involved in this, right? Because a lot of all of these taxi drivers and Uber drivers and rideshare drivers are constituents of city council, right? And so city council is getting more involved in it, but nobody seems to be actually.
In a perfect example of that is, and I think it's worth talking about it because it very specifically, from my understanding, impacted your business. There was an insurance structure, and you can get into as much or as little detail as you want, but I think it's worth speaking about, because I think I know there was a lot of frustration related to that ruling. We're basically, for long story short, and explaining this, is that you came up with an innovative kind of hybrid structure to meet the required insurance limits using admitted carriers for the minimums, New York State minimums, and then using surplus lines from non-admitted carriers for what would be surplus in every place in New York State except New York City. And then the TLC basically said, you can't do this. They passed a rule against it. And it was kind of confusing, like, okay, we're in the middle of an insurance crisis and someone's coming with an innovation thing that makes the industry less reliant on American transit, which is everybody's trying to solve for. So could you, I know you testified there, could you like, how do you think about that situation and like, how do you deal with that? Or
Sure.
what?
So let me first explain how our insurance works, high level. We, as a large fleet, and this is normal of large fleets, and some of our competitors operate this way as well. We have for New York what's called captive insurance. It means we actually have our own like bank account, if you want to think of it that way, where we are forced to keep money in there to pay out claims over that can last. You can have to pay out a claim 20 years later, right? So it's sort of like a savings account, if you will, but it is totally structured, right? And it has all this regulation around it. And you have what's called actuaries who are like, I don't know, insurance scientists that look at everything, right? And say, oh no, you need this much money, and looking at every single accident that you've had, everything you've had to pay out, everything that is pending. So we have our own actuaries looking at our risk, if you will, right? Based on all of our drivers. And they look at our underwriting policies, and we can touch on that, and who we let back into a car after an accident, who we let into a car to begin with. And we have full control over that. And we use data and IT to help us, streamline it and make smarter decisions. But so we have our pot of insurance money, right? We then use an insurance company, just like everybody else. We have to get a policy that sits in front of that has a certain premium, and that's what everyone pays, premiums, that is giving you sort of like a price tag on the risk. But at the end of the day, we, VGM, are the ones who have to pay out all the claims. It's not the insurance company. So it's actually very low risk for the insurance companies. I think love this because they're sort of the front face of it. And by the way, like if we were to go out of business, they are holding the bag, right? But there is so much money that we have to put in there in this captive. We are a global company. We are more than just the few thousand cars that we have in New York City. And so there's very little risk that we're just going to leave for Mexico. Well, we operate in Mexico, so leave for the Bahamas tomorrow, right? And liquidate everything that we can. And so we have our own actuaries looking at that. The insurance company that we have to hire, and you've written about this, insurer, accident fund, they're synonym names, right? They have their own actuaries, and they are an A-rated. There's this national rating agency that really is the gold standard of how many billions of dollars in assets they have, right? So they can't go out of business, and how they deal with risk. They have their own actuaries. Then all of these policies have to go to the state to be approved, and the state has its own actuaries, which are the same people that have been looking at American Transit and all these other ones. So we can leave that there. But like our risk is actually like triple, quadruple looked at, more than anybody else. So with that said, we feel like we're acting extremely responsible. If you get in an accident with a VGM car, you will get paid. Now, of course, we're going to fight and get lawyers and evidence and dash cam footage or whatever to make sure that we're only paying for the liability that we're responsible for. But you're getting paid, right? I can't say the same for Attic. We have claims where, first of all, both companies in their infancy used to use Attic, right? So we've been a client. But also, any driver who has Attic who hits us, it is like, this is why there was a lawsuit with Uber and Attic, because we can't always get paid, right? Even when it's clear and like the courts have said that we can't. And so, we are solvent and responsible, and that's where we're coming from here. That we did get creative with our insurance company. The other thing that people have to understand who aren't in the weeds is, as you said, there is a state minimum in New York. It's called 2550 of the $25,000 and $50,000 limits that you must have as a minimum to operate a vehicle. New York City TLC within the 5 boroughs requires a higher standard of 100,000, 300,000, 300,000. fine. We're not going to have, we're definitely not going to have time to go into whether that's the right number or whatever, but there is this higher limit that's required in the taxi industry or in the rideshare industry in New York City, right? So if we're operating in Westchester, if that was our base, different limits. It's not regulated by the New York City TLC. That higher limit has higher costs. That's how insurance premiums work. And it is, again, regulated by the TLC. Unfortunately, we and others get stuck in this loop of finger pointing and lack of responsibility, where TLC will say insurance is regulated by the state, DFS, up in Albany. DFS will say we only regulate 2550, the state minimum. And you're back and forth. And it's really unfortunate. Now, the way our policy is structured, which is, again, totally legal, and I think it's creative and responsible, is that we have a state policy that is what's called admitted, which goes through DFS, and then we have an excess policy that sits on top that fully covers any suit up to the 100, 300 limits, right? So it's an extra 75 and an extra 250. And that allows us, because the risk is much lower. Most accidents that you're dealing with, again, this is oversimplifying, but the way I think about it, you're paying out that 2550, if you will. When someone gets in an accident where they've lost limbs or they're in a coma or whatever, and they're suing for that policy limit, the 100,000 or 300, they need it, right? And they're going to get it. That is not, in our view, where the major fraud is. And fraud is a whole nother topic, right? Doctor bills and all that. But like, it's much harder to prove that and to get it through the excess policy that normally, like, you're paying that. It's in the 25 and 50, right? That it should be a $10,000 bill, but they're able to inflate it to 20. And because it's under that policy limit, it's just, in general, easier to do and to fight.
And I think as you're explaining this, I think, and, you know, as the TLC watches this and as the insurance regulators watch this and as people who know the industry watch this, everything you're saying makes total sense. I think a very key point that you're making and you're bringing to everybody's attention is that the structure you were using, which has now been, I guess, effectively banned starting January 2026, which I'm sure is frustrating to the company and all of that stuff, is that, just for the record, that was legal and was allowed by the New York State Department of Financial Services. And so when there's this, when the TLC, whether it's the commissioner or other people in the commission, say, well, we don't want to be the insurance regulator, right? It's kind of like, well, inherently you're regulating above the DFS minimums, so you are in the insurance regulation business. And so now that they've ruled that this structure that you're using cannot be used anymore, basically, do you have to kind of revert? Do you have to? It's not like you're going to become an addict client or something like that, because that's dangerous in different other ways. You're just going to have to adjust how you do business, and that is what it is, kind of thing.
Yeah, look, I'll say we have to rely on the people who actually write the insurance policies, right? Those are the insurance companies. Our captive is not an insurance company. It's our requirement of paying out money, whatever, but we need an insurance policy. We have a few irons in the fire. We're trying to navigate it and figure it out. At the end of the day, insurance companies have to come to us and say, this is what your new annual premium is. The problem is it sounds like working through DFS at the state level is like pulling teeth, and it takes months and months and months. And so I'm not necessarily going to know what my new insurance premiums are until November.
And then drivers have to know that it's going to fundamentally, that will impact pricing, whatever that comes out.
But we're working through, like, already we've been working, and just in case this was passing, you know, our goal is to, again, still figure out ways and insurance products, if you will, that will keep the price similar, right? And continue to figure it out. There's also, like, let me say one more thing, and then we can go to that hearing where they did change this rule. I appreciate that, you know, Commissioner Doe, we've talked about this multiple times and met with his office, and I genuinely believe that he listens and he's a good politician with us, if you will. I mean, and I don't mean that, sorry. That could have come out as like he's a politician. I meant he's one of the good guys, and we appreciate that. I don't agree.
He's trying to balance and understand different things.
Yes. I don't agree with the decision. I don't agree with how they went about it. So I won't say that, but I'll preface my criticism that I'm about to give with like there's appreciation there. To make the reason they were concerned about this rule is that in the wrong hands, if you have this excess policy that doesn't have to be stamped by the state, but is only stamped by these national regulators who are much more trustworthy than the state, to be honest, it can lead to bad things for the individual operators, right? You could have
you could have an American Transit that doesn't have a guarantee
and offer these and whatever. And I get that, but we gave solutions to that, right? First of all, this could just be for large fleets who are able to have captive insurance and show the responsible financial side of it, or for companies that are willing to put a like the national rating that I keep giving you, the A, that's not just about the risk or the payout. It's about the assets under, like there's a financial component of it that DFS does not look at. If they did, Attic couldn't get reapproved. Maya and others maybe couldn't get reapproved. And
it's
so,
the equivalent, just so people understand, it's the equivalent of an insurance S&P or Moody's rating, basically.
yes. Yep. And it is literally like nationally accepted. No one is arguing that. It's just that it doesn't go through the state. There's also this other argument that, that policy that sits on top doesn't have to pay certain fees to DFS, which go into this guarantee fund. But again, I would argue the guarantee fund, if it has to bail out Attic, already is insolvent. And so you're going to make me pay more for others' mistakes. Like, or let's talk about creative ways to add a 3% fee so things do go into the, I don't know. There's creative solutions out there. And unfortunately, the only thing that came through this rule change that went through a really robust comment period, that other parts of it were changed. And then at the last minute, they pushed it through without another comment period, which they normally do when there's lots of changes to the rules. And then it was voted on. The only thing they voted on was, let's take away this tool that VGM and a few others are using responsibly. But we actually aren't going to make any rules about Attic or solvency or anything else that's important for the industry. We're not ready to fix anything yet. And let's wait for the governor's budget to pass in April, because there are certain rules in there that could affect insurance and could open up the industry a little bit, in their view, responsibly through DFS, that would help some of the products like what we're talking about. But nobody knows if those are going to pass, and nobody knows what it's going to look like in the April budget. Right. And there's an August renewal that DFS is looking through all the, so it's like, why now? Right? If there's so many things going on and you're saying, well, we know we didn't act for 30 years, but DFS now really says it's looking into it and is going to act responsibly. So we're going to make this change now. And we think they're going to open up like other creative solutions, and they're willing to be creative.
I mean, yeah, where we came out at AutoMarketplace related to this, very similar to you, is like, we understand DFS and the TLC's concern that individual, like, a new company comes in and does like a park insurance stunt where it's like, okay, everybody $2,000 insurance, and then it's completely unsustainable, although the DFS wouldn't approve that and all of that stuff. Where we came out is that I think it's totally reasonable for the handful of people who can do self-insurance like you guys do, who are bringing A-rated paper, where I think that's like, yes, it's an experiment, we get it, but it's like the whole goal of the American transit crisis in many ways is to make American transit is basically too big to fail. So one of the main goals of the entire thing is to reduce the reliance on American transit. And in many ways, thankfully, you came up with your own insurance, because imagine, however many cars you have, if they were attached to Attic, the problem would have gotten bigger. And so on that, I want to talk about. No, go ahead.
Yeah. So the last thing on Attic is there's also like major legal issues separate from the insolvency, but like technically, I'm pretty sure DFS was supposed to act as soon as it was formally insolvent, like last year ago or a year and a half ago. And they haven't. And so what I want to see is a real plan or comments or path forward, right? Nobody knew, are they going to be able to renew? Are they not? They only increased their premiums by like 6 to 8% for individual. What does this mean? Like, I want some moral leadership and clarity from state or city especially if they're going to make rules like they did, which they have the right to, but that affect us in this little part without sharing the rest. So it just feels it feels weird. And I get it that it would be an experiment and a responsible one, but like they experimented with 10,000 EV plates. And in my view, the commissioner and I disagree on this because I brought it up and he has an answer for it. But like in my view and many others, that the 10,000 plates exacerbated a lot of the issues. Yes, the wait list existed before that, but absolutely the timing and the process and the lack of communication and planning and that was a test. And it failed, right? It failed the industry. 2023 was amazing for drivers. We were able to invest a lot more in newer cars and innovation. 2024 has been crappy for everybody across the board, even EV owners who got their plates, right? Who are now struggling with charging and struggling with their insurance and struggling with their interest rates. And so like, in my view, don't talk to me about not being willing to try pilots because it could be too risky, because that was a pilot and I think it was a failure.
And we're going to return to that as we one of our we're leaving some of the fat pitches for the end related to those 10,000 plates, because a lot of people who read our stuff as well, what you're saying, we agree with that. Is just it was a bad mistake as far as mistakes go. So to conclude on the insurance, and we probably can have a separate, I know, Jeremy, you are uniquely knowledgeable about this topic, and maybe if more attic news comes out in the future, maybe we'll have a separate discussion just about insurance. I did want to mention, and we'll share this in the newsletter and the YouTube video we distribute in the description. You just recently announced a partnership with, you recently announced a unique partnership. I'll let you speak about that.
Yeah, sure. So you're right, this absolutely ties into insurance. Thanks for reminding me to talk about it here. We just announced a huge purchase from a company called Nexar, which is the leading AI dash cam company. A lot of drivers in individual, like owner operators, what we call them, individual drivers in New York already use Nexar cameras because it's one of the best. We are going to be installing them throughout our entire fleet. Nationally and then globally. They're not in Mexico yet, but we'll go together. And there's a few reasons for this. And we've struggled with this before. We've always wanted to do this, but it's hard as a rental fleet to add cameras, right? Many drivers have cameras. That is the first question we ask in our interview after an accident or an incident. Do you have dash cam footage? And unfortunately, too many people don't. But all of our cars will have it, and it is part of a larger pilot that we're doing called Drive Smart, which I'll touch on in a second. But we've purchased 2,000 to start with the option of up to 12,000. So we have these Nexar cameras. It's inside and outside facing, right? So outside is obviously for the accidents. Inside is also for driver protection. And this is where it's really, I guess, the needle that we have to thread with our drivers. And we're going to be spending a lot of time, educating and sort of selling this, if you will. But deactivation, we work closely with IDG, also the Independent Drivers Guild, which focuses a lot on deactivation, unfair deactivation, or, sometimes just like fair mistake deactivation. If we have issues, just to give you an example, where like the dealer prints the wrong color on the registration, on the MCO, right? Like the birth certificate of the car. And that's just a mistake that dealers do sometimes. And then people get kicked off of Uber because they're in a white car, but it says on the supplier portal that it's a black car, right? So we will sort through those things. I mean, that one is actually just our fault, but there's other times where it's not our fault, and we'll help drivers. Back to, so deactivations and driver protection, interestingly, in a study we did, about 40% of our drivers nationally are female. And a lot of drivers, as we have interviewed them, say that, it is a little unnerving in this industry to drive at night alone as a woman, right? Whether it's in downtown Atlanta or in Queens. And so having that camera also protects our drivers. There's been, unfortunately, too many stabbings and shootings, but also just rude, obnoxious behavior, drunk, throwing up.
Does it record audio, or is it just visual?
It's audio. There's options for audio and visual.
Got it.
And so this will be an important tool for our drivers to fight deactivation. and to protect themselves. People are less likely to do something if it says you are being watched, right, on the window, which it will.
And do you have any,
But
I think a lot of drivers will be,
yeah.
do you have any specific like avenue to communicate with Uber? Like, let's say a driver gets deactivated. Do you have, because you're such a large fleet, can you actually reach out to someone at Uber and say, hey, like he was driving one of our cars, here's the footage, review it, or not necessarily any special treatment related to that?
It has to go through the driver. It's the driver account, especially if it's a customer related issue. If it's something with the car, then it's on us. But we have seen cases, and I actually just dealt with one last week. This is where I think we're different, right? We're in the office. We know our driver. We know, yes, there are some drivers that we don't really know by name. There are hundreds and hundreds of drivers that we know by name, and we know their story, and we've been there through the bad times, and we help put them on payment plans when they got the flu for a week and a half and fell behind on all of their bills because they're not making any money. And other companies probably would have just taken the car back after 4 weeks of struggling to pay. But, a 2-month payment plan, and we're able to get that driver back to health. So anyways, we had a driver come in who got deactivated for using the wrong car, right? So, or someone else was using that license plate, whatever. He went through the proper channels and was rejected twice. Yes, we were able to lift that up to our partnerships at Uber to have it reviewed and present the contract and help in that sense. We're not doing that. We can't abuse that power and do it with hundreds and hundreds of cases, right? The driver has to start. But yes, absolutely. That is where we can be helpful.
And so would you say drive smart? This is really interesting. And that camera looks, I guess, does it stick on the windshield?
Yeah, so it goes on the windshield, and then it'll actually be hardwired into the car. And it has telematics as well. Most of our cars have advanced telematics anyways, but this will add to it and will help with the cars that don't, right? The older Toyota Camrys or whatever. But so a few things. One, the driver safety. And I think this is the biggest sell to drivers, right? Is that deactivation piece, plus helping them when they're not at fault, right? And look, 50% of accidents are at fault, and 50% are not at fault. I can't lie and say that none of our drivers are ever at fault, right? And so, yes, does it hurt them when they're at fault? A little bit, but actually without the footage, they're still at fault, and it's even worse, right? And they still may get rejected because we have no proof that they weren't at fault. So this will absolutely help drivers get their deductible back quicker. It will protect them, and it will help us overall as a company lower our loss runs, right? Which is how risky we are, which ultimately lowers our premiums, not for next year, right? But for the year after, and the year after that, and the year after that. And so our view, and I want to talk about Drive Smart because it ties into this, it's a plus on top of the camera, is that this is our responsible way of ultimately lowering our premium. I mean, premiums are going to keep going up. Everything goes up, but going up by 2% instead of 10% or 15%, right? And so even if we have to follow this rule that the commission passed, maybe it would have gone up 20%, right? But because we're able to add these pieces in, it's only going up 10% for us, or something like that.
That makes total sense. And what is drive like? So
the
camera part. Yeah,
so the camera part. And by the way, these cameras are expensive. These cameras have a monthly fee, and many drivers are paying that because they want it. You're getting it for free with us, right? We're not increasing our prices. In fact, for the first 300 customers that we're going to be installing these in, we're giving a few weeks of a discount to get them comfortable with it. And so you actually, you save money by doing that. And so, but the real play here is deactivations for drivers and insurance, right? Long-term insurance play. It's not about just one accident or 2 accidents. You probably know this, but most New Yorkers who take Ubers don't. The NYPD no longer files police reports for most accidents. You have to be severely injured or have a fatality for the NYPD to come. And that's not a knock on the NYPD. It's the policy these days, right? With the bandwidth. And so unfortunately, when we're trying to fight so that we can pay a driver back their deductible, we have to win the insurance case. It's really hard when it's he said, she said. I went through a red light, he went through a red light. I hit him on the side, he hit him. And so, yes, we have a team that calls our drivers the moment we sense an impact, right? Because we have some of that telematics in some of our cars. we train our drivers, not train, we tell them in the pickup, right? We send them text message reminders. Every time we see them for an oil change, we remind them, we put a little sticker in the car, call us and report every accident, right? We have a form that they can fill out in the app while they're at the scene of the accident. That is when you want to get the most info. Of course, if they need medical attention, they do that first. And if we call them, we hang up but right, most accidents don't need
For the operators out there, by the way, this is what you're speaking about. Will, for the guys who know the fleet business, what you're basically doing is, this is like an incredible initiative that is going to, you're basically develop on top of the expertise you already have. You're going to develop kind of this proprietary system of underwriting, you could say. So you're not only solving for driver screening, you're solving for like inherently you're kind of killing 5 birds with 1 stone.
Exactly.
With the system.
And we already have, I think, a pretty sophisticated underwriting process. And remember, because we were 2 separate companies that merged, and so we have 10 years of data on many drivers who, sort of go through the turning door, right? You get in an accident with Buggy, total the car, and you just leave and go to American Lease, total that car, go to Fast Track. So we actually, and because there's no police reports, or there's very few police reports the last few years, the only accident data, an accident doesn't go on your driving record if there's no police report. However, we have 10 years of history of every incident and dent and this, and then this statement from the drivers. And so when someone reapplies, we're able to do a real risk assessment. And that's not to say that you're not going to be able to rent a car with us if you got in an accident 5 years ago, or even if you got in 5 accidents over 10 years, right? Because we can look at those reports and there's some level of trust when there's no police report, right? But if we say you're not at fault or this, and based on your driving, we will give you a car.
And by the way, this will be music to many insurance companies' ears. You're basically saying, and you're absolutely right, my experience has been that as well with obviously my much smaller fleet, where there was always a police accident report, even if it was like a fender bender, like the police would file an accident report. Now you have to file an MV-104 form, but you got to file that within 10 days. So you're basically insuring for
and we do the MV-104s, but all that is a driver statement. So it's as strong as the driver in court.
But at the very least, your file is sometimes it's not even filed. So you're basically insurance.
But yeah,
every single, any way to litigate an insurance claim, you're basically trying to cover every single aspect of it. Where it's like, no, he said, she said, like you're saying, it's like, let's forget about our argument. Here's the footage.
Yeah. So now these are our police reports, right? And there's so much more than that, but that's what it boils down to. Nexar also, just as a company, is a leader in the industry. And this is not just a camera, right? It's an AI camera. And so there's elements where they can help us reconstruct the accident with like layering in Google Maps, and the data that flows through here is a gold mine. And that's where, again, an individual operator is not really using that data, but we call it a EDW. It's like a data lake, right? Every data point that we get on this car, every bill that we pay for the car, every rental, all the income, we can actually look at the total cost of ownership and the total value of each car. We can also look at the driving behavior. So the amount of data that's coming through this is also going to help us lower our maintenance costs. All of this is, again, yes, so that we're more profitable, but so that we can actually reinvest in the customer.
And also offer better rates as well to good drivers. And so Drive Smart. Yeah.
Drive Smart.
Drive Smart. Yeah.
Drive Smart is essentially a driver rating program. Everyone has that, right? Insurance companies have that, where this is specifically on the risk, like on your driving behavior side. Although I do want to share that, like for underwriting, we look at payment history, right? Has someone consistently not paid? Did we have to repossess that car over 4 or 5 years? So there's other things that go into underwriting, but on the driver behavior, we are specifically looking at all the data that we get from the car and from the cameras, but primarily harsh braking, excessive acceleration, speeding up really fast, stopping really fast, and consistent speeding. Those are the 3 factors that define riskiness, right? And that you can look at high level, right? You're not just looking at one stop sign or whatever. That was my first concern in New York, right? But so we did a pilot last summer in New York and outside of New York, where we studied this, and it's not just about giving the score, but it's about the psychology of trying to make drivers focus on safe driving. And that's what Allstate does when they give you your personal like benefit at the end of but they usually do that once, right? Or based on not getting in an accident. If we're able to incentivize good driving with a $10 discount or a $15 discount a week, only if you fall in that bucket, right? And we remind you about that weekly, monthly, daily. Right now, we're sticking with weekly. The truth is, we over communicate with our drivers because there's a million things we need. There's a TLC appointment there. You need an oil change. We want to confirm with you about your payment coming. So we are trying to navigate that as a company. We want our drivers to work. We don't want them blocking our number because they're getting 15 different text messages about 15 different topics. That has happened over the years. I think we've come to a better place where we're trying to just communicate the top things. But so I don't think daily is right, but weekly. So we're actually people who are in this pilot now, we're sending weekly driving reports that show you your score based on those factors, how you drove that week. And it's a green, yellow, or red light, how you compare to the rest of the drivers in our fleet in New York. And if you're in the green, you get $15 off your bill. If you're in the yellow and red, you get nothing. But you also get told what's driving your score, right? Excessive braking, speeding, whatever.
I think that's really helpful because the fact that I did a similar there was another camera company that was kind of an AI camera company, but I think a lot of drivers are going to appreciate that not only are you going to tell them green, yellow, red, you're actually going to say, here's the detail to what the rating was based on.
Exactly. And again, it's high level. It's not high level because we're looking at every second that you're driving, but it's high level in the sense of, right, you're not getting a detailed Excel sheet of everything, but in general, right? Like Dawood, need to focus on smoother acceleration. So the pilot that we did last summer, we actually saw, this is a long-term thing. I can't tell you today that I have 6 fewer accidents because I have 100 accidents of people, whatever it is, but we saw a 40% reduction in risky driving behavior in those 3 categories. And that's huge. And we're able to extrapolate that to millions of dollars over the next few years of fewer accident costs and liability. And that is what insurance companies are going to.
And also safety for the general public, like pedestrians,
yes,
bicyclists, everything.
For sure. And so, that's what I said in my testimony at that hearing, but we didn't really have the Drive Smart program up and running, and we didn't have Nexar yet. Like, that's where I want to invest millions of dollars. And by the way, $15 sounds like nothing, but $15 times hundreds of people times thousands of people a week, that actually is a big investment, right? And that's not even talking about the investment in the camera and the subscription and the data team that's analyzing it. So yeah, I don't want to spend $5 or $10 million more a year on my premiums that honestly are just sitting in front. Like, the money is in our captive. I want to spend $10 million. It's not 10 million, but I want to spend millions of dollars on cameras and driver programs and making drivers safer and making New Yorkers safer and Atlanta, Georgians safer and in Philly and in Boston. And so that's where we want to focus.
New York City is, I think, like a great testing ground because, as you well know better than anybody else, this is like the most extreme kind of outlier cases happen here. Every single situation under the sun will happen here. So the fact that you're testing it here, I think, is going to translate interestingly.
So we're rolling it out slowly and responsibly, but we currently have 300 drivers on the Fast Track side enrolled in this Drive Smart program. And every new customer that's picking up a certain car of ours is automatically enrolled. So we enrolled everyone who was on the road and new customers. And again, it goes back to not just the data, but the psychology behind it, right? That's what's important for changes. It's not just rating people. I mean, that helps with underwriting, but not with changing their behavior. And so for the first 4 weeks of the program, there's a trial period. You're still getting those reports, but you're getting the $15, even if you're red, right? Because if you haven't tasted the honey and you're a red driver, you have no incentive. Like, you don't think you're ever going to make it to green, right? And so if you never got that credit, I don't think the program's going to be as successful. And so we took a guess and we're going to keep, adjusting it. But everybody gets that $15 for 4 weeks. And then on the 4th week, you get the stronger message that says, hey, you wouldn't be getting this. Really focus. And it resets each week. So just because you were a really crappy driver this week, it's a blank slate the next week, right? You can be green.
And by the way, at the end, I should have mentioned this up in front. I was going to mention it at the end, is that we'll provide the links to how to reach out to you guys. Like if someone wants to rent from
Yeah, sure.
either Buggy or Fast Track.
I think most people know, but you can just go to the
Exactly. That's why I feel like
like
I'm,
apply now or call us or walk in Queens and in Brooklyn.
exactly. So if they're
But
interested.
again, on that point, actually, and I think something that helps us and shows sort of the scale, you can apply today, right? And we have the technology to know that you have a TLC number and it's valid. You could be underwritten within an hour. We don't have to go through Attic and get approved. There's all these issues where if you rent from a smaller fleet or anyone who uses like Attic or some of the others, you can't get added to a new insurance policy that also uses Attic if your name has been on it or whatever. But we have our own insurance policy. I can insure whoever I want. Now,
So you
it's in
can
my,
what you can service a walk-in, basically.
we do service walk-ins. Now,
Okay.
again, we send it through our underwriting department. And
Yeah.
if there's, I don't know, some conference in Vegas that we have 100 new driver applications in our Vegas market, it's going to take a little while, but we can actually underwrite sort of on the spot through our team. It's not the people in the front office doing it. We can get you a car, and if it's available, you can walk out of here in 30 minutes with everything after you
I think
sign.
that's going to be really high. I mean, you know this. I'm saying something you already know, but I think a lot of people should know that, when a driver, let's say a driver even has their own TLC plate, when they get into an accident and they need to get back on the road, that service offering, that like product offering is so valuable.
Yeah.
Okay. So now there's two, this has been great. And I think a lot of people who are listening to this are going to be very interested in what you're saying, because very few people fundamentally have your insight. There's only a handful of people that have your insight. So the two last topics, just so the driver, like the audience knows what we're talking about, are the juicy topics. One will be about TLC plates, why they exist, what's going on there, and then EVs and kind of driverless autonomous vehicles. So, okay. So on TLC plates, easy topics, like nice, simple topics, right? So obviously we kind of already touched on it. Do you agree? Let's be very simple about it. Do you think a TLC plate cap, an FHV license cap, needs to exist? And how do you think about that? And how would you explain that to a driver who might think that, this is a big, like a game that these rental companies are hoarding TLC plates? Like, how do you think about the FHV license? Pause.
So I think I said it before, but in general, we are pro regulation. And I think that over the next decade, a lot more of the major metropolitan cities will follow some sort of New York TLC lead. We operate in Boston, and they actually have a TLC, but it's on the car side, right? There's a certain inspection that you have to get before you can rent. So it's not as stringent or anything like that, but that's a good step forward. And I could see certain cities, again, trying to regulate the industry. We believe, and I guess I'll use I statements. I believe there needs to be some kind of cap, or I would say management of the number of vehicles and drivers. And that's a second point that I've heard Uber stand up for this, and the IDG as well, and other driver unions and driver, groups. I think there should be, again, we can use the word cap, but caps on both, right? The plates and the cars. There is only so much that the industry can support while making sure drivers are earning enough, right? And so we've seen that over this last year, and I think there's currently an imbalance. I think there are too many drivers in general, right, that are struggling. And then there clearly were too many drivers on the Uber and Lyft platforms, right? And that's the whole thing about driver pay and lockouts and wait lists. And you can talk to Uber and Lyft and David Doe about those, because we're only indirectly related to that. But right, that's the problem. And that is what I think needs to be managed or regulated. And it goes back to your own view, like economic view, right? And you could have economics professors that are more on one side and more on the other of government control and regulation. And I'm sure we'll see that play out. We are seeing that play out on the federal level in different ways. But, in general, yes, I think it is a government and a city's responsibility to determine to keep the market healthy.
And so now what if a driver says, or someone else says, well, you're just creating a new medallion system, right? How would you kind of say, well,
I
is
would
it
say
TL?
most drivers, so
Yeah.
a TLC plate is a TLC plate. A non-TLC plate, let's call that a street plate, right? What you and I have on our cars. Um, I don't think the majority of drivers believe that it's in their interests to just have everybody driving street plates, and anybody who wants to work for Uber or Lyft or any of these bases can just decide to do it for an hour or two. In New York, with the TLC card and stuff, or the TLC licensing, you pretty much need to be full-time. And we have studies in driver pay that shows that you're not going to make it if you're not full-time or mostly full-time. You can only do it part-time, certainly if you own your own car. But even so, like the depreciation you're putting on the car and what it takes and to keep up with the regulation, you're still not earning.
And the
And
cost of insurance as well.
those
Right?
part-time players are taking away, like slowly chipping away at the earnings of the full-time players. So I I think, well, people would absolutely make that argument and have, and I've spoken to drivers, casually in the office, and usually they tend to agree with me. There should be some kind of cap. It's just that everyone wants it to be them that gets the plate and not the guy from over the river in Jersey that's just coming in and sort of stealing their New York business. So I think if you think about it that way, it makes sense inherently that there is some kind of cap. Now, what that number is the question. Before COVID, there were about 120 plates, right? That dropped down to about 90,000. After COVID, there were things in storage. No one knows exactly how many are active, but let's say 90,000 plates. Then, in 2023, again, there were very few complaints. It was a great year. People were able to just jump in and work on Uber. Maybe there was a 3 or 4 week waiting period or whatnot. Drivers were making money. Fleets were, I think, investing back in their fleets, and people were generally happy. Then, so 90,000 is probably the right number for the market. I don't think, there's all the TLC charts, but like ridership hasn't drastically increased. And there's always an ebb and flow with seasonality, right? When tourists are visiting, when people are in school, when they're not in school. And so, 90-ish thousand is probably right.
And then to layer this on with the yellow cab industry, fundamentally, there's also 3,800 medallions in storage. So if the plan is, and it follows the same logic of basic supply and demand. So if the goal is to get those, and obviously you're not in the tax medallion industry, but if the high level goal is to have those 3,900 medallions come out of storage, those medallions need trips. If you add more TLC plates, that's reducing the overall pie of trips, especially right. Since Uber, as you know, recently Uber can now dispatch to taxis. So this even gets more complicated where, okay, you're releasing TLC plates, there's 3,800 medallions in storage, there's lockouts going on, you're trying to figure out utilization rate and trying to come up with a very complex formula to, which in my opinion is a bit of a whack-a-mole. Obviously it was gamed already by Uber. So it'll be gamed again, So this is like more first principles. I think what both of us are saying is it's more like, let's simplify it. There's only X amount of trips. And if you can somehow limit whether it's the driver licenses or the plates or a combination of both, then that is a first principles way to ensure driver earnings are protected fundamentally versus us being say, well, distance rate utilization versus time-based utilization divided by like, it's just like this, it's in my opinion.
On the last hearing, you did a lot of work reading through every single written piece and all the oral stuff. So great job there. But like I was flabbergasted that it is still not digestible what the utilization rate is. And therefore, it's impossible to say what it should be. I want drivers to make more money. I want driver pay to increase. Absolutely. But I don't think that many people, we even saw commissioners asking questions of like, I don't get it. Right?
Yeah, there was literally a quote where one of the commissioners was like, I still don't understand it, but I don't want to take up any more time.
Right. But how can drivers understand it then? And so I think that needs to be simplified. This is where, again, I want to rely on government regulators who should be seeing the whole picture, because it's not your taxi point of Uber dispatching the taxis is critical, because I I don't know enough about it, right? I don't know why or what, but I know that that's part of the trips, right? So Uber drivers are saying that's not fair. It takes away from trips that I should be getting, and then that lowers the utilization rate and whatnot. The TLC or the state or whoever needs to come and say, here's the whole picture, right? We're looking at the total number of rides. And by the way, maybe we need to count those yellow cab dispatches through Uber as part of the utilization rate or whatever, so that I don't know. It's not my job to know. It's not my responsibility. I need to give the best.
And so on a high level, and I think you've made the case, is that there's a good reason why a TLC plate cap exists. There,
Yes.
a supply cap, whether you want to call it on a driver's license or a vehicle. And I think you've made it very clear. It's a kind of simple supply and demand, basically. And I think an interesting prediction of yours is that'll come to other markets, that people will see New York. I think in Toronto, actually, to that point, they recently want to introduce regulation capping the number of drivers, I think, but I don't know enough about Toronto. Okay.
Just on this point, though, before we move on, so I personally think that it should be plates and drivers. One of the saddest things that I've seen, or that we continue to see, is people are going through the TLC process. They're spending $1,000. They're taking those courses. They're getting the fingerprints. They're getting the drug test at one of the 5 places that you have to get it. That's expensive and there's no parking and it's annoying. And then they're sort of graduating and there's no work for them. They can't get on Uber. They think they can, or they were told that maybe they can. At some point, 6 months ago, there was a time where, and there's no work on Uber. There's no work on Lyft. The private bases are now overloaded because all the people who got waitlisted for Uber and Lyft are going to the private bases. And so there's less and less work, but they're allowing more and more people to get their TLC license. And so people will rent from it. Our return or repossession rate after 1 or 2 weeks has skyrocketed, right? Because people are trying, they're renting and trying to get on the apps, and it's not working, right?
That's such a great point. You're saying, like, make this more a trade than like it was historically. It's more like of a trade business where, like, if you want to be a carpenter in New York City, you have to do an apprenticeship, or, it might not be the perfect analogy, but you're saying, like, if you're just doling out TLC licenses, it's kind of a money-making scheme as well, but
right. Yeah. People leave the industry, right? So there's people entering and there's people leaving all the time. That's how an industry works. They should be monitoring that and essentially say, whatever the right number of drivers is, and it should be more than the number of cars, right? But whatever that number is, and whatever we think the right number of cars is now, and then there should be a real review. Do I have deep confidence in whatever report is going to come out to say whether there should be more EV licenses given out? I'll be honest, no, based on everything we've seen over the last 2 years. But whatever that is, there should be a real report that looks at the health of the industry overall, all the rides that could be dispatched, and say, here's the number of cars we think should be there. Again, as people give up licenses, if they decide to, new licenses could be added. Or maybe there's just growth of 1,000 licenses a year, 2,000 licenses a year, because that's how we think the market's growing. And then the same with licensees, right, with drivers. And as 5,000 people retire, 5,000 people can come on, right? And as you've been in the industry long enough, and maybe even proven that you're a safe driver, you can get your own plate. And so I've even had, like, positive conversations with drivers' unions and with Uber, who would get behind this idea of, you need to rent for a year or two and prove yourself in the market and show that you're a safe driver and show that you can do this. And then, you're able to get your own plate if you want to.
And I totally agree with you on so many points you're saying. The other thing that I was thinking about, I don't know how you think about it, is that if a driver leaves the industry and then rents out their TLC plate, perhaps that should also be looked into, because fundamentally what you're doing is different. You have a business that's focused on a rental solution, while that feels more like a like a way that guy moved to Miami, but now he's individually renting his TLC plate, which otherwise should have kind of fallen off,
Yeah.
And then the second thing I'll say is that in these discussions, a lot of people forget to mention the yellow cab industry. And there's inherently, and yes, we understand that it's controversial, but if we have decided collectively that the taxi medallion is an asset, that it needs to exist, then to give out a free, like a quote unquote free TLC plate and still have a taxi medallion, yes, they can do street hails and everything, but it just, those two things really can't coexist for too long, where you can get a free TLC plate and you have to buy a taxi medallion for $100,000 or $200,000. Any like, that, I guess, framing it like that, thoughts about that?
Yeah, again, we have enough to avail ourselves with the rideshare diamonds and all that. So really not an expert on the TLC, the yellow cab piece, but I agree. And I think even again, giving out unlimited free diamonds also is a problem. Diamonds are the rideshare plates. And so yeah, I generally agree with you. Look, the taxi industry has gone through the ringer, right? You think of yellow cabs as iconic, New York City, and they are, Sex in the City, and the street is filled with it, whatever. But there's about 9,000 yellow cabs, right? Uber came to town and there were a few hundred, and then quickly it went up to 120,000 Ubers. I mean, they weren't all Uber. It's
Yeah,
Uber.
there's like, yeah,
That's crazy to think about. People
13,500.
don't realize 8,000, 120,000.
It was like, so the yellow cab guys don't get upset at me. There's like 13,587 tax medallions and all, and so. But no, you're absolutely right, and I think you answered that question as good as possible, and I'm sure the comments section will be filled with interesting comments. But it's a free country. Everybody.
We have to look. The regulators have to look at all of it and see the dispatching. Too much of this like detailed utilization rate and just for Ubers or just for high volume bases, right? That's another issue. Uber and Lyft are the only high volume bases now, and they're under one category. But all of these other bases, yes, they're so much smaller, but they're a part of the pie of how New York drivers make their money. And now that people are locked out of Uber and Lyft, some people are only making their money through that. And so they need to look at everything. And I do think they need to be pushed to do a better job. And there's not enough inside industry knowledge there. And then it's not even just about the driver pay. I think Ubers and taxis are both getting too expensive. For me to go to the supermarket, right, if I'm carrying back the bags, it's crazy. And that's not all Uber's fault, right, of taking its share. Everyone
there's a sales tax, there's a surcharge, there's a this, there's a that.
That's the TLC's responsibility to protect the industry. And I'm not saying that David Doe wants an additional MTA tax and an additional this tax and a congestion. But at the end of the day, someone has to speak for the industry and say, enough. We can't have half the ride go to city and state taxes because it's too expensive for us as an industry. And the last thing, again, I don't want it to sound like I'm standing up for Uber. They can stand up for themselves, but similar to how people say, we started this conversation about the price of a Camry, right? And too much is just going into Jeremy's pocket. And we talked about how it's not. I also love the innovations with Uber Eats, and that I'm going to get Delta Sky Miles and Shake Shack on my thing with Uber in the future. Like that's what Uber absolutely makes a lot of money and has beautiful offices. And part of that comes from the share that they take, but so does the innovation that they're bringing. And so, I just think everything has nuance and context. And we can absolutely talk about taking more of that Uber share for drivers, but it's never going to be sort of like totally equal. And
I think, by the way, it's fair for you to mention that, because as we criticize the TLC, like Uber and Lyft have also kind of demonized the rental industry to forward some elements of their agenda on, like, for example, what the minimum rate should be, because, you have rental cars and the calculations that they do is higher. And they said, well, there shouldn't be any rental cars, so you're absolutely right to say that. It's like, okay, and we've done the analysis, and it's pretty well known now, about 30% of all TLC plates are in corporations, which is a proxy for rental companies. So if 70% to 60% of the market is individual owner operators with their own TLC plates, and Uber has 60 or 70% of the trip share, if we're talking about the monopoly and predators here, I feel like they're, I'm not saying Uber's that, but it's just weird for them to say, oh, look at these greedy rental companies that have too much of the share. It's like, what are you talking about? You and Lyft have 80% of all trips in New York City, And so that could be argued that, anyways.
I feel most of their ire in the last year or so is more at the regulators than
probably,
at
yes.
the rental car.
Which I, by the way, I take a lot of their sides with that, because they're making their life very difficult, and it sometimes feels a little bit unfair. So
Yeah.
Okay, the last two things, and then we'll wrap this up, although I really enjoyed the conversation. And don't worry, we'll, in all our podcasts, we index it so people can skip around to the topics, but electric vehicles and autonomous vehicles. So at a high level, I guess right now it's still in place by 2030, 100% of all, it's only Uber and Lyft, but that's a huge chunk of the for-hire vehicle fleet in New York City has to be either electric or wheelchair accessible. What do you think about how will we reach that goal? And what do you generally think as a fleet owner about how EVs are doing? Are they ready for New York City prime time? Is the charging infrastructure there? Like, what are you seeing?
Yeah. Okay. So on the EV front, we are, I would say we're EV agnostic as a company because we are driver focused and we're a company. We want to buy the cars and service and manage the cars that drivers want. If I have 1,000 cars sitting on a parking lot, whether it's in New York or Philly or Atlanta, I'm going out of business, right? So that's not helpful to anybody. Even if I have the best cars, if they're not at the price that drivers can afford or they're not what drivers want, it's not helpful. So that's sort of the framing we took with EV. And I will say that we spent a lot of 2023 working with the TLC, with local city council, because that's where a lot of this starts, right? With the state, with people involved in the industry to try to, like, we know EVs coming, to think about it, talk about it, to create what we were calling a responsible transition to EV. And really, it's about a transition, right? What would it look like for larger fleets or any fleets to be able to trade in X amount of gas diamonds and get X plus 2 EV diamonds, right? Would that push us to make the investment in EV more? Things like that. But throughout the whole time, it was all predicated on what will make drivers successful, because we found too many city and state regulators who were just, wow, EV is so important and it's really important for our overall PR and initiatives to be able to align with green stuff, which I agree with and I appreciate. Sorry, I don't agree with that part, but like I appreciate that, right? And we should be moving towards a better, safer, more sustainable world and city. But this is not somebody who can plug in their EV Porsche on the Upper West Side at one of the free parking spots with the plug-in thing on a level 2 charger. So much of the conversation throughout 2023 was about level 2 chargers. And we spent so much time introducing people to drivers who said, so that they could learn, guys, you got to change your language, right? This isn't about level 2. Uber drivers can't afford the time of plugging an EV into level 2 in the Bronx and in Queens and in places where you're not even focusing on. This is about level 3 chargers. Time is money, and you cannot expect an Uber driver to have their car charging for 6 hours, right? Because they don't know when they're stopping.
And to that point, and I've spoken to people about this, one thing that always fascinates me is when they talk about charging, they assume that no other New Yorker has a car. So any other city resident with an EV also is fundamentally sharing those chargers. And yes, the capacity is increasing, but it's not there. But basically, your simple answer is like, if the technologies, if the driver demands EVs, you'll provide EVs, basically.
Correct. So I want to give you a few examples or a few points. One, there was this news article, I don't know, a year and a half, 2 years ago, of an Uber driver who was driving someone to LaGuardia and literally noticed a building on fire in Brooklyn and asked the lady, what time is your flight? Can we stop? And he saved someone from a burning building and called the police or whatever, and then took her and she made her flight. Uber got wind of that and reached out to us and said, hey, you guys are like a fleet partner. We don't know who this guy rents from. Turns out he rented from us. But could you offer him a Tesla? We want to essentially like pay for a Tesla for a year for this guy. Because EV was the sexy thing at the time. And we said, sure. And so we had actually just gotten our first batch of Teslas and we reached out, we did it, we coordinated. And the guy said no. He asked if he could have a Suburban, right? A gas guzzling Suburban, because that is what makes this driver who knows how to navigate it the most money. I will say the best car to have in New York City is a gasoline 7-seater, right? Where you have a third row of seats that can fold down in the trunk. Not necessarily a Suburban because those are more expensive, but you're able to do the Uber X rides. Uber Black is difficult. You really have to know what you're doing to make it work, and it can be very
Or you have to have private clients on top of Uber Black.
and you got to know where, because a lot of times they're picking up Uber X trips, right? But Uber XL, where you're not actually relying on Uber Black, is key. So we have a Chevy Traverse that qualifies for that. It's actually not Uber Black. A lot of them are black, but it just doesn't qualify. And that is sort of like our best value car, and where drivers are making the most money.
I think I really actually I wanted the second, but like basically the point you're making, and it's important to get this out in the, you know, the world here, is like someone who runs thousands of cars in New York City. If you told all your drivers, hey, you can have an EV for the same price, your gut feeling is probably a large majority of them would say, thanks for the offer, but
No,
I like
thanks.
the gas car.
Yeah. And so, look, it depends on, our industry is so affected by the market and regulation and other things. And so gas prices, right? If gas prices increase drastically, if we have a trade war that increases them, then yeah, people are going to lean towards EVs. But if gas prices stay low, apples to apples, people trust a gasoline car more. There's still this fear of the battery running out, right? And being, because a lot of our drivers, right? You may get a ride to Philly or to Connecticut or even to Boston, right? And so,
What percentage of your fleet is EV? Or like, what are you guys like less than 10% EV now, or
yes, less.
directionally?
So we, a year and a half ago, we bought 20 Teslas. That was, and again, when the EV license cap, we'll come to that in a second, came out, Tesla was really the only option where there was enough supply in New York, because in order to apply, you actually needed the VIN, you needed to purchase the car first, or have the
Yep.
PO, the purchase order for the car. So Tesla, that's why you see so many Teslas. Plus the Model Y counted as black XL, because it has that third row in the trunk. I think they're changing that.
Yeah, they disqualified it recently. Yeah.
But that was what I think like 80% of the cars that got new plates were Teslas. So that was really the only like reliable option. It was tough. They didn't all rent very quickly. Now they're all rented. It's 20 cars out of thousands. And so primarily it's been people who have a driveway, right? If you live farther out in Queens and live in a house, or in Jersey, you're allowed to live in Jersey and be a TLC driver. And so that's what we found. A lot of people rented it because it was cool for a week or two, and then they were like, "There's literally no benefit. Like it's more expensive, and
The charging infrastructure is tough.
yeah." So they save money on gas, but like again, it's not worth it. So that's, as we see major demand, we will increase, and that goes for us across the country. You know, in Atlanta, actually in all of our cities, but Atlanta's our biggest fleet outside of New York. Hertz obviously made the news of buying a lot of Teslas, and they pushed a lot of it. You know, with Uber, you got extra benefits if you drove an EV through Hertz on Uber's platform. People would barge into our office and say, "Do you have any cars? Please, can I have something that's not EV? Like, are you going to force me to rent an EV?" And we're like, "No, welcome. We have. I don't want to make us like Texas oil rig company.
Yeah.
We're not, but it's what the industry needs." And that was another thing that we spent a lot of time with city and state officials, because we heard a lot of language of, well, you know, we just have to teach the drivers. We have to teach them that the battery's not going to run out. We have to teach them that it's accessible. We have to teach them how to change their schedule to charge with it. We said, no, you guys have to learn what they need. And
I think that's such a good way to put it. It's not about what I think that's such a good way to put it, where it's kind of an arrogance, where it's like, well, they just don't know better. They'll learn. It's like, no, you don't know the street reality of how this industry works. And I think I'm with you. It's like we're all like, EV's the future. We're not like we're not like you're saying, like, you know, drilling, you know, oil wells in Texas over here, but it's like this can't be a religion. You know, like
and just that idea
adoption can't become a religion.
And pushing it on the drivers is what, you know, was frustrating us. And again, forget that that's not how it should be, but just the challenge. I mean, in the TLC industry, if you go to the TLC courses that you have to take to get your license, they're offered in Hindi, in Russian, in Chinese, in Arabic, in English, in Spanish. Just the city's ability to actually educate, right? You would need to speak dozens of languages and not just have a pamphlet that can easily be translated. So we actually have significant language support, and I think that's what sets us apart from other New York fleets. You can actually talk to people in different languages, the top ones, Cantonese and Mandarin, Russian, Arabic, Hindi, Urdu, and not just read a pamphlet in that language, but actually discuss the deductible, right? And so we can do that in person, we can do that over the phone, and we can even do it face-to-face on video.
No, that's great. And so no, that's a really important point to mention. I think drivers will find that interesting. So with EVs, I think as time progresses, I think all of us agree that they will be adopted, charging infrastructure will come, but I think I don't know where you fall out on this. By 2030, I can't imagine this, at least on the EV side, maybe on the Wave side, there'll be a good chunk, 100% of Uber and Lyft in New York City to be EV and Wave. My bet is they're changing that, but let's see.
I think so. Look, no 5-year plan run by a city is ever fulfilled in that 5 years. I know New York is amazing at everything, and we're New Yorkers and we love New York. I don't see it happening. But there's also this standard from Uber's side too, right? Uber has said nationwide they expect that in 2030.
Well, they don't have to own any cars, so it's easy for them.
Right.
But and it's a good,
a few pieces on EV. One is we're actually seeing, and again, now that Toyota has moved all of its cars to hybrid, I cannot keep my hands on a hybrid. Our shipment got a little delayed. Like the moment it comes out, we're probably underpriced on hybrids. So if you're watching, get your car now. But we are. And so every driver wants that. It is the perfect balance because you're spending less on gas. And to be honest,
it's also good for the environment too.
It's good for the environment. It's good enough for the environment if you want to look at it that way. Yeah. But there's also studies of like having too many EVs are good, but having too many, right? Just the cost of production actually puts out more greenhouse gases than some sort of balance. And so hybrids, I think, are the future. And I think that the Green Rides initiative should be changed to include hybrids. I think that there's also an economic component. I don't know the right term for it, but like almost economic or classism that is actually going to cut off drivers from being able to participate in this industry because they can't afford the luxury of an EV or the charging components, but they could afford a hybrid, right? Hybrids are in the middle. And so by setting this standard, I get it why we're doing it from the green side. We also have to look at the driver economic side. And so I would love to see where hybrids count in that, right?
And to your point on hybrids, to your point of hybrids, the Sienna Wave is a hybrid and a Wave. So that's both of them.
Yes, although they also make non-waves,
exactly.
Look, on the Wave front, we are one of the largest Wave fleets. Like within our fleet, we rent Waves, and there's a benefit to doing it with fleets because like Uber, for example, gives a Wave credit, certain amount, they just give cash back to renters who complete a certain amount of trips. They only do that with the larger fleets, right? It's not a one-on-one thing. So if you're going to rent a Wave, do it with us, but do it with a larger fleet in general because you'll get that benefit. Waves are really expensive, right? Not only is a minivan more expensive, but a $10,000, $15,000, $20,000 conversion to get the van in there the ramp in there is more expensive. They're more expensive to maintain. Collision is extremely expensive. You get rear-ended, that's a huge bill. And then they fall apart easier. Sorry, fall apart is the wrong word. But they
require ongoing maintenance. Yeah.
And the ramps shake. And so drivers, hey, after 2 years, no matter how perfect it's not about safety, right? They're still safe, but like it's loud and it's annoying. And so I think that's what stops people from just spending 60, 80 grand to get their own plate, right? And get a Wave plate.
Because there's, as most people know, you can still technically get your own TLC plate with a wheelchair accessible vehicle.
Now, all of our Waves have a folding down third row of seats. So when you're not doing a wheelchair ride, you can get the Uber XL rides. Okay. So that's how we sort of balance it out. I would recommend that to anybody. If they are buying a Wave, do that. It's not the most comfortable seat, but it counts for Uber XL.
Yeah.
And then on the EV front, so I would want to see hybrids in the future. We will follow the lead, but we will follow the lead. I said it before. If I bought 1,000 Teslas and they're sitting in a parking lot, I'm not doing anyone a favor. Not my customers, not the city, and well, I guess I'm doing Tesla.
And I think and on that point, I think Hertz learned an extremely expensive lesson with their EV bet, and it just goes to show that you can be both pro technology and pro green. But I think maybe perhaps where we need to get to a place is a little more balanced, where it's like, you know, if someone is complaining about EVs because they're missing the horse and buggy, yes, I understand that's frustrating. But if someone's saying, okay, I like the EV future, but the average cost of an EV is $50,000, and that's, you know, 10,000 more than the average cost. If an EV gets into a collision, there's like 3 independent shops. So if you make these points, it's like, can we just have an adult conversation and talk about this without, you know, someone getting flustered?
And that's where we were really frustrated. So I want to hit on the Green Rides initiative and the expansion of the 10,000 plates are two different things. So we knew the Green Rides initiative was coming, right? Where they're setting these goals to 2030. And we were pro Green Rides initiative. We were actually looking at the purchase of like 100 EVs and figuring out a responsible way of doing it and selling them to customers so that we could participate in that. Launching 10,000 EV plates at once, or opening the doors and then 10,000 get approved within like 3 weeks, is completely different and came out of nowhere. And that's where we're frustrated, because we did invest the time and the money in meeting city council members, in meeting with TLC, and meeting state regulators, and meeting Con Ed and the people who are, because we wanted to be involved in this. And that was more geared towards green initiatives, green ride initiatives, whatever. The press release came out and the mayor spoke at the podium, and David Doe, and even Uber wasn't there, right? At that.
It was only Lyft, you're right. Only Lyft had come, yeah.
And Revel, of course.
Well, yeah.
And then they announced this and nobody knew. I mean, the TLC didn't even have the application page set up. There was no structure. This was pushed through for whatever reasons, but how can they do that without talking and having industry players involved, right? You don't have to listen to me, but you have to hear me. Otherwise, you're making decisions.
No, I mean, I'm totally aligned with you on this, and we wrote about this and quite vigorous, strong opinions about what happened here. I think, I mean, obviously you have to have evidence. I think there was some federal subsidies that New York City quickly wanted to get, and there's a little politics with that. But fundamentally, like you said, so much of the chaos of 2024 is downstream, directly downstream of 10,000 TLC plates. And who is blamed? Uber's an SOB, Lyft's an SOB, the rental companies are SOBs. But this has nothing to do with 10,000 TLC plates that were released. And I think
and those drivers are struggling. I don't have the hard, like, this is all just sort of on the side. But yes, we have had drivers rent from us who gave up their TLC plate, right? Who bought a Tesla and then sold it, or sold it to somebody else because it wasn't working, because the insurance industry wasn't ready. I'm not even talking about Attic, which is a whole nother issue, right? And most of these drivers, guess who they got policies from on the liability side? Attic, right? Because that's what was available and cheap. Then there's the whole issue that the actual, the other side of insurance is the actual insurance that pays to fix the car itself, not just who you hit, right? Not the liability,
the
but
comp and collision side of it.
And so it is, a lot of these guys got really screwed with those insurance plans because nobody knew the real cost of insuring a Tesla, and Teslas are hard to fix. And even the new cool Toyota BZ, whatever, they're hard to fix. Nobody knows. There's only a certain authorized dealers. And the cost, there's no history, right, of how much it takes to replace a headlight. And so if you have a few shops charging $5,000, the insurance companies say that's what this costs now. And so there's a lot of issues with that. And I think the costs are just out of control for these people who, I'm not blaming them, but I think they got the most screwed in that they had to scramble and run and buy a car.
And they have loans now that are underwater because their depreciation.
And then they got kicked off of Uber and Lyft and these other bases, and the pay is down in the industry. So yeah, I feel bad for them. I'm sure some of them are successful, but I think many of them are not.
And I think on this point as well, the business community that's listening to this, I think you guys are uniquely positioned as people to speak to related to a national fleet or even a smaller fleet that operates outside of New York City. If they are like, oh, I wonder how I should think through EV adoption. I feel like you guys would be subject matter experts at that topic, especially at scale. Okay,
Yeah.
so
And look, I just want to say, we're really not against it. I don't see us being the EV leader in New York necessarily over the next year or two. When customers want it, we will have it, right? And we are a large global company. We have financing, we have investors. We're able to buy cars at scale. And so we will, right? I'm not worried about us doing it. I think it's really going to start more in some of our other cities. Boston has a lot of EV desire. We're hearing a lot from drivers in DC that they would be interested in some in Atlanta. So we'll pilot it, but we're not going to force it on anybody.
yeah, and that makes total sense. Okay, last topic, self-driving cars, autonomous vehicles. A lot of drivers are obviously gigantic question, but like, what are your thoughts on, on when is this gonna, I mean, it's kind of here, but in pilot format, but it is kind of science fiction has become science fact. But what are your thoughts on AVs and self-driving and how do you think about that?
Yeah. Look, I I personally think that we're still a long way off. I know that it's here, right? And we're much farther ahead than I think anybody thought. I've taken a Waymo car in Phoenix. It was cool. Um, uh, but I specifically in New York, like New York is a really hard city. And there is a lot more testing. And I think just, you think about it, I'm sure there's a way for a computer to do it, but like I can't turn right in Manhattan because everybody is crossing the crosswalk, right? And so is that car going to be stuck? Like just practically, I think it's really hard in New York. So I think these other cities will, you know, see it much quicker. Um, I think it will come at some point. I don't think it will ever replace 100% of drivers, right? I think there's always going to be a rideshare industry. I think that there's gonna be a transition time, and maybe you'll see some people who dedicated their life to being rideshare drivers are some of the rideshare testers that are no longer hitting the pedals, but they're sitting there to press the brake. And that'll be a transition. I mean, throughout history, there's been transitions like this, but I don't see it coming in the next 2 years, like to New York. And even the successes, it's really cool what Zoox and Waymo and others are doing just conceptually. Forget that I'm in the rideshare industry. It's cool. Having 10 cars or 100 cars in Phoenix or even 200 cars or 300 cars is still pretty minuscule. And so it's going to get an outsized, like people say, it's already here. You just said that, but it's not in the next 5 or 10 years, I think, going to replace hundreds of thousands of drivers, right? So I think we'll see and learn together. I think the industry is still going to be super successful. They don't need to replace hundreds of thousands of drivers, right, to get their valuation and get their
Yeah,
investments.
I
And
think I'm aligned with you, and I think Uber CEO also said the same thing. I'm definitely of your thought process is especially when you know the quirks of the industry. For example, auto like insurance, liability questions that have to be answered related to that. I think it is more like a 5, 10, 15 year timeline, when it breaks a more mass adoption threshold.
yeah,
And so no, but that's very interesting.
but
But
our role, so I'll say, I think there is still a role. We're going to fight and support drivers forever. And there will always be drivers, and we're always going to be a responsible solution for them. I also think that as AV companies need, to test their fleets and manage their fleets, the AV companies are software companies, right? They're not car management companies. And we touched on this a little bit when we were talking about like the Hertz and Avises of the world. There is an art and a science to this. And we believe there is something that makes us different, not just in dealing with the customer, but dealing with the car. We don't play the depreciation game, right? The rental car companies tend to keep cars for 1 or 2 or 3 years, and then they sell them before there's a real expense, changing a transmission, which is $5,000 or $6,000, or doing something really hard to the car. We consistently maintain our vehicles and invest in our vehicles. Our goal is to run them as long as possible because we're making the profit out of the vehicle, not out of the sale, right? Not out of the depreciation game. And so, Uber, 5 years ago, 6 years ago, had millions, maybe $1 billion invested in like running fleets of cars, right? And they got out of that business. They failed horribly at it. GM did the same thing with Maven. Every single company has tried to do that and failed, including, I think Hertz is shrinking away from the rideshare industry, so I'll put them in there too. We, on the other hand, started with a vision and a goal, and we have grown. And so I think even when you remove the driver, there is an important role for managing the vehicles. And yes, like part of our science and art is managing the driver and the vehicle, but the vehicle is a really important part. And it's no matter what software you get, no matter what fleet software and maintenance management software, there is a skill that's needed. And I think we have that skill. And so, I would guess 5 years from now, you're going to see companies like us or us managing a lot of these fleets alongside renters, right? So there's still a role for us.
Yeah, no, I think it's very compelling what you're saying. Okay, Jeremy, this was enjoyable. Believe it or not, I think maybe you're in this campus too. I could talk to you probably another 2 hours about various topics, but hopefully there's going to be more news in the future, more developments. Maybe we can have you back on if you're amenable to it. But this was great. Thank you so much for your time. And the last thing I'll leave it with is, if someone wants to reach out to you, let's say, an insurance executive is watching this, or even let's say a driver or a fleet, like, what is the best way to reach out to you? Like on LinkedIn, or is there, how do they?
Yeah, sure. I would say so again, most drivers in New York know Buggy or Lyft. And you'd come into our Buggy office and ask for me, or sorry, either office. I bounce around. In terms of like external people, Voyager is the name. So voyagergm.com, go to our website. There's a contact us, or find me on LinkedIn or anywhere. But yeah, that's what I would say. I will say this was a pleasure. This was 2 hours. I doubt anybody's watching the full 2 hours. I know you index it. If anybody watches the full 2 hours and can prove it, any driver out there, happy to give you $50 off your next rental. Just somebody watched for 2 hours.
Yeah. No, I mean, you'd be surprised. I mean, we do this is probably the longest I've ever run, but we do long form podcasts. You'd be surprised because, like, you kind of implied it. This industry is like, it's such a big industry. It's a bit of an information desert. Everybody's talking about interest rates or self-driving. There's very few people talk about NYC TLC. So you'd be surprised, doing a long form discussion, indexed, it definitely helps, with someone like you who's in the know. You'd be surprised. It's very like, I see the data in the background. It's actually more engaged than people think. But that being said, it's also good of you to spend 2 hours to give such insight. Very few people can give your insight. So really appreciate it, Jeremy.
Awesome. Well, thanks again for having me.